So we had the rate cut last week of 50 basis points. And I've had the question, I asked constantly, so what's the interest rate now? And there's a lot of expectation on our rate dropping similarly. And that didn't happen. And so some people are confused on why that wouldn't have been a similar drop. And there's a couple of reasons. So number one, in our industry, because the Fed announced that drop was coming and they were like 99.9% positive it would happen, the industry went on ahead and adopted that change into our rates. The bond market did that for us. And so one of the biggest things that helps with is that we don't have people waiting to lock their rate until the Fed day, right? We didn't have people waiting to close on their home till Fed day. I mean, that would cause a whole layer of chaos if that were the case, because everybody would want to wait till that date. So our numbers did already have that rate drop padded into our numbers, which is why we had seen our rates drop by so much. And so, and we love that. So our customers got that rate drop ahead of time. But I do want to remind you guys that the Fed rate is not the mortgage rate. They're two completely different rates. And the Fed rate, for instance, because we dropped by 50 basis points, the interest rate on credit cards dropped by 50 basis points. They got a break on their interest rate when it comes to credit cards, which was wonderful. There's some other things that it directly affected. It is the rate where banks lend to each other. They call it the overnight rate. And so that was affected from bank to bank rates where they lend to one another. Mortgage rates are not any of that. And so our rates are ran by something different. Now, the Fed drop does affect us, but it's an indirect effect. So we already had that rate drop padded into our numbers. But what changed also is that we saw a couple of reports come out last week that were better than expected. So for instance, the housing starts report came back better as expected, which means that economically things are doing better than what was expected. And so that when we get good news in the economy, it makes our rates go upwards. And then another thing that came out was the jobless claims came back better than expected. And good news again is negative news for interest rates. And we saw a little bit of a tweak upwards last week, even though we've still come down a huge way. I mean, like over a point way. But we saw a little bit of tweaking, and then you had people expecting our rates to come down an additional half point, and that just wasn't the case. So I hope that's clear, but I just wanted to explain a little bit more on why things may have been different than what everybody was anticipating and expecting when it came to our interest rates. So I hope that helps, and I hope that gives you some answers for your clients too. I'll talk to y'all soon. Bye.